Happy Monday out there, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Monday, November 7th, 2022. Starting with our economic release spotlight here. Just wanted to spotlight the Chinese trade data we got for the month of October. We continue to see zero COVID, Emperor Xi's zero COVID policy weigh on Chinese demand and production. So exports slowed 600 basis points to minus 0.3% year over year. That's the lowest growth rate we've seen since May of 2020. Imports slowed minus 100 basis points to minus 0.7% year over year. That's the slowest growth rate we've seen since August of last year. So very clearly, we're seeing, again, Chinese exports, Chinese production, and Chinese consumption, Chinese imports down on a year-over-year basis, like as a function of zero COVID mostly. But one thing that I want to call out in the data is that we're starting to see China, we are seeing China begin to stockpile crude oil imports. And so if you look at China's volume of crude oil imports, it accelerated 2.9 million barrels to 43.1 million barrels in October. That's the highest we've seen on a monthly basis since May of this year. On a year-over-year basis, we accelerated 1,610 basis points to 14.1% year over year. That's the fastest growth rate we've seen on a year-over-year basis in China's crude oil imports since December of last year. And then lastly, on a 3-month annualized basis, this number is jumping off the page. We saw that accelerate 1,290 basis points to 62.3% on a 3-month annualized basis. That's the fastest growth rate we've seen since May of this year. So we're really starting to see China stockpile crude oil. And the only thing, just our view on that is that the only reason they'd be doing that is if they have expectations or plans, or maybe they're starting to think about having plans or thinking about having plans to end zero COVID at some point, or at the bare minimum, materially revise how zero COVID looks from a heavy-handedness perspective in and across the Chinese economy. So consensus estimates right there are, sometime around the spring of next year, we'll start to see some material revisions to China's zero COVID policy. I am not in Beijing. I am not friends with Emperor Xi. We are not inside the Politburo, which is the, particularly the Standing Committee, the PSC, which is the main governing body in China that makes all these key economic decisions. We have no friends there, so we're following everyone else's guidance and kind of just looking at the rumors and whatnot. I think a lot of investors in general, when it comes to China, one mistake they tend to make is applying this sort of Western policy lens to Chinese policy. And if you made that mistake a couple of years ago, you're down, I don't know, probably 50, 60%, pick your favorite Chinese equity exposure. We have not made those same mistakes because, again, we just accept the Chinese policy for what it is, and we accept their guidance at face value. And the Chinese authorities have consistently, throughout my career, have done what they said they were going to do. And so one thing, we do expect zero COVID to persist at least throughout the winter, because that's exactly what they said they're going to do. Got more indications of that this weekend out of China's National Health Commission confirming they would unswervingly stick to zero COVID. But again, we're talking about a potential inflection next spring of next year. So anyway, getting into my Lombo dashboard, we're going down global macro here. So starting with the US dollar, that's neutral price momentum from a short-term perspective, bullish from a medium-term perspective, getting towards the lower boundary of the range there. You got about 64 basis points of downside in the Bloomberg Dollar Index. Gold, that is still bullish, bearish from a medium-term perspective, neutral from a short-term perspective. It is oversold. So if you've bought the shiny rock, definitely go sell some gold. If you are a long-term bear on gold, this would be a fantastic spot to be shorting gold. That's what you want to see. You want to be seeing things that are bearish from a medium-term perspective and are overbought from the perspective of the probable ranges. That's a great setup to short gold there to the extent you were inclined. US dollar, that is bullish from a medium-term, 10-year treasury yield, my apologies, bullish from both the medium-term and short-term perspective. You get towards the upper boundary of the range there, got about upside to 4.22%. It's a lower high relative to sort of the upper boundary we saw earlier this year. Not quite a lower upper high, not quite a higher high relative to the price. S&P 500, that is bearish from a medium-term perspective, neutral from a short-term perspective in the middle of the range. VIX, bearish on both durations in the middle of its range. NASDAQ 100, that's bearish on both durations in the middle of its range. Russell 2000, that's neutral from a medium-term signaling perspective, bullish from a short-term perspective. So the Russell's starting to look very different in the context of the U.S. equity market. So S&P is kind of in the middle. NASDAQ still very bearish. Russell starting to look a little bit more bullish, particularly from a short-term perspective, right in the middle of the range. So that's an economic, that in my opinion, that's a signal there. We discussed some of those, signals in the context of our forward market risk in our Around the Horn this weekend. Definitely go check that out if you want the update and what to do with that information from the perspective of your portfolio. Because again, all of our research is designed to help you make and save money. We don't publish research just for the sake of espousing our thoughts. Our thoughts are worthless if they do not help our subscribers make or save money. Anyway, getting to crypto, Bitcoin, that's still bearish from a medium-term perspective, bullish from a short-term perspective. That's nearly overbought there. Bitcoin's got upside to around 21,260 in the longbow dashboard here. So be careful chasing Bitcoin here. If you're a long-term hodler, that you would be slowing your DCA purchases, or maybe just waiting till you see something closer to 19,256 on the downside to take advantage of that, just so you're not running yourself over at the beginning of the trade. Ethereum, that's neutral from a medium-term perspective, bullish from a short-term perspective. A lot of bullishness, as you can see, from a short-term perspective across a lot of risk assets, and that's really a function of the dollar really starting to flag and sag, and they really trade heavy, which is another thing we talked about in the Around the Horn in the last few weeks. Shanghai Composite. That is bearish from a medium-term perspective, neutral from a tactical perspective, getting towards the upper boundary of its range there. Not quite. Upper boundary now starting to lift higher, so maybe that's giving you some indication that investors, and I would imagine it's largely institutional investors, who've been very underweight China since going back to last year. If we really start to see movement on the zero COVID policy front, and again, this may be movement in terms of plans, maybe not actual movement in terms of seeing results on the ground for another 3 to 6 months, but it's just in terms of plans, you're going to start to get that itchy trigger finger associated with covering a lot of those shorts. Because again, a lot of international money managers have been very underweight China, particularly those that are benchmarked to the EM and broader global equity indices. Anyway, crude oil, that's neutral from a medium-term perspective, bullish from a short-term perspective. That's getting nearly overbought here. Where we at on crude oil here? Yeah, got upside to around 94.8. But as you can see, both the upper and lower boundary of the proper range are starting to slope up. We expect this medium-term signal will start to flip the bullish soon, and that would be a clear indication that the energy trade is not dead. It just took a bath associated with President Biden leaning on that from the perspective of releasing millions of barrels per day from the SPR ahead of the midterm elections. Anyway, lastly, circling back, wrapping up, ag and industrial metals are both bearish from a medium-term perspective, neutral from a short-term perspective. Ag's towards the lower boundary of its range. Industrial metal actually is oversold there, but again, not an exposure in terms of commodity exposure. It's the most sort of tethered to the growth cycle. And so unless you have a real clear indication that China's economy is about to inflect positively, over the very near term, industrial metals are likely to be the last exposure in the commodity market to really feel an inflection in the Chinese economy, and particularly inflection in the outlook rather for the Chinese economy. And then so wrapping up, as you know, we always try to conclude this program with what's most overbought and most oversold in my broader global macro dashboard. So there's about 300 ETFs in here, all representing individual factor exposures across global macro. I sort them by the odds to give you an indication of what's most overbought, most oversold today. So definitely go take your opportunities there. For those of you who are tactical traders, short-term options traders, etc., just people trying to make money and pick up some points. We want to thank you for tuning in by giving you free alpha. What a fantastic trade for you. Precious metals, very much overbought. We talked about that in the context of gold as well. So be careful if you're long gold, precious metals, etc. This would be a great spot. Medium-term bearish, short-term neutral, oversold in the trading range. So that's definitely something you want to be shorting there. What else? Equix. Oh, this is all country road index, ex-US. So this is global equities, Asia, Europe, Africa, Latin America, ex-United States. That is bearish from a medium perspective, neutral from a short-term perspective. That is overbought as well. So a lot of overbought signals across, sort of anything that looks like it could have a very positive response to an inflection in the Chinese economy. Again, we don't see that inflection occurring until we really start to see a big change in the zero COVID policy. But again, markets are anticipatory. They're going to move ahead of that as long as they get confirmation from the right political authorities to get that information. Again, we have not seen that confirmation, but that doesn't necessarily mean markets can't move ahead of themselves and get ahead of themselves in terms of pricing that in. And we do believe some markets are ahead of themselves in terms of pricing in an inflection in zero COVID right now. We won't be too specific about that because, again, that information is reserved for those who are paying us to help them make money and make and save money behind our paywall. And then lastly, getting into the oversold signals here. So we got this is short emerging markets. That's oversold, which means emerging markets themselves are actually overbought. So be aware of that. This is QQD, simplifies a NASDAQ fund with downside exposure from a volatility perspective. That is oversold as well. CTA simplifies sort of tail risk strategy. That's, of course, oversold in the context of asset markets that have rallied over the last few weeks. What else? Short EFZ, that is inverse EFI. So very similar signal to the EUM in the sense that the actual underlying exposure is overbought. And then VCLO, this is cloud and cybersecurity. I don't know what the heck is going on in this index, but this is not something you want to be buying the dip in. This is bearish short term, bearish medium term, deeply oversold. Yes, it's going to bounce. Maybe you can play for a bounce if you want to YOLO some calls here, for those of you who like to do that kind of stuff, but this is definitely not the kind of medium term exposure you'd be putting on a long trade in from a medium term perspective. This is a market that's very clearly getting capitulating, maybe not done capitulating with that. So Darius Dale presenting our macro minute for Monday, November 7th, 2022. Everyone have a wonderful week out there. Excited. By the way, we got a macro scouting report for November, Tuesday afternoon, tomorrow afternoon. So about 100, 150 slides of incremental information, everything I think based on all the work that I'm doing 12 to 16 hours a day that you need to know. If it's not in that slide deck, it's not something I think you need to know. And guess what won't be in that slide deck? The U.S. government's interest burden. Went off on a tangent this weekend on that. So had some fun interacting with the community on that. Hopefully everyone got the message. The message is simply as follows. Don't waste your time or my time focusing on things that don't make or save money. There will come a time in our careers, in our investment lives, where the U.S. government's interest burden actually matters to making and saving money. And guess what? I'm going to hold off on talking about that stuff until we think it's relevant. But if it's not relevant, you're wasting your time. And certainly I'm not going to let you waste my time. And we appreciate all the time that you do allocate to paying attention to 42 Macro. Thank you.